Welcome back to another episode of the Earnings All Stars charts. And this is the busy week. So what should we be looking at? Well, I've decided to look at retail and energy. Now, energy, normally I do cover it a lot on these videos, but nobody has really cared in the last couple of years, or even for sure in the last couple of quarters. But the two big energy companies reporting this week, Exxon and Chevron, both have announced big mega deals. They're mega M&As acquiring big companies that are going to be somewhat transformational for both of them. So I want to take a look at their charts, and I wanted to look at some retailers, even though many of them reported just a couple weeks ago. But these are companies that are on the regular calendar year, not the fiscal year. So what's happening with them? And there's some of the biggest names. So let's dive in and check out these charts. So the first one actually isn't one of the bigger names, but I wanted to talk about it because of the industry that it's in. Ethan Allen Interiors, ticker ETD. And you can see outstanding earnings surprise track record. Even during the pandemic, Ethan Allen is a furniture retailer. And that got a little dicey at first and then really took off because we all needed desks, tables, outdoor furniture, just about anything we needed for our houses as we were staying at home, everybody remodeling. But then you can see here was the huge pandemic rally. And now it's just basically been hovering at this, kind of mid-range. Did see a little bit of breakout on the last earnings report here. It was an earnings surprise of 15.6%. But with those mortgage rates rising, the furniture retailers are feeling it the same way the home builders. And so now we're starting to see it come down a bit. Not a lot. I've been waiting for this stock to kind of break down again so that maybe I can get in it. But down 6.2% the last 3 months. We'll see what happens on this earnings report. I am expecting another beat here, even if it's a small one like the last one, which is, this one not that small, 15.6%, and then we had 8.8%. And I'm not expecting the big green arrows there, but still I'm expecting another beat, but it's all about the orders. What are they really seeing? And what's their free cash flow looking like? They have no debt, Ethan Allen, and they pay a big dividend. So what's happening with all of that? That all comes into play as well. So Ethan Allen, a good proxy on housing and to some extent the consumer. ETD is that ticker. And going to keep it up with the retail side with Deckers. Deckers Outdoor, you might get confused and think, is this decking? What is this? But no, it's shoes and other accessories and apparel. Deckers Outdoor is Uggs. It's also now Hoka. Hoka is a big game changer, but Deckers, one of the premier retailers out there, doesn't get the glory some of the others seem to do on the retail side, like a Costco or whatnot, but only one miss there in 2021. And let's take a look. It was barely a miss. It's probably like a penny or something. So I'm gonna ignore that because they basically have, an outstanding earnings all-star track record here. Last quarter, however, a little bit smaller than what we've seen, just 8.5. Prior quarter, 32%. They have had the inventory problem that other retailers have had. They ordered too much during the pandemic, and then the supply chain improved. They got all this in, and then the buyers weren't there. So they have had to move that inventory out, but I think they're pretty much done with that. And they should still command a premium on pricing, both for Uggs, even with some of their other brands, Teva, and with Hoka. 3 months, though, down 8.7%, but it's coming off those 5-year highs there. And so not surprising that on this market weakness, it's going to pull back. But this is an interesting one to watch on the retail side, and I'm going to be tuning in. So Deckers, DECK. Then the other major retailer reporting this week is Tractor Supply, ticker TSCO. And this is one of the best performing retailers of the last 20 years, this stock. And you can see it too has a good earnings surprise track record, but we suddenly have had 2 misses in a row. What is this signaling? Because otherwise, Their very good track record all throughout the pandemic. So they missed 2.5% last quarter and 2.4% the quarter before. Those aren't huge misses, but it's still a difference in the trend. A lot of companies do pride themselves on beating, even if it's just by a penny. They do pride themselves on keeping their earnings surprise track record. So the two misses in a row is a little concerning. These shares are off in the last 3 months as well, down 8.3%, kind of heading back to this level here in 2022 when everybody was worried about a recession. Is that what we're seeing here? Again, this is like a lot of the other retailers that I watch that are the best in class. I've been waiting for a buying opportunity. Maybe we're going to have one coming up here, but this is definitely one to keep on your watch list on the retail side this week. Tractor Supply, TSCO. Then I am going to switch over to the energy, the big oils. There's two of them in the US that do all the areas. They have refining, marketing, distribution, and then they are also drillers. They're both global. First one is Chevron, ticker CVX. I now own this in my own personal portfolio because Chevron bought out a smaller energy producer I owned earlier this year, PDC Energy. And so now I have the Chevron shares, and soon Hess shareholders will have the Chevron shares because they just announced a deal, over $50 billion deal to buy Hess. Hess has drilling in Guyana, which is just huge now for a lot of the producers. It is seemingly going to be yielding a lot of oil, and Chevron sees the Hess Guyana production at maybe 1 million barrels a day. That is big, but Hess has that deal with Exxon, who I'm going to talk about in a minute. They're in it together so that they can negate some of the risk in drilling in a new area that is common. But so I'm going to talk about them. But you can see the shares. What are they doing on the earnings surprises? It's kind of a hit or miss on what the estimates are looking like. Their last miss was just 3 quarters ago. This is very small, just 1.7%. And then earnings miss in 2022, 2.33%. But given the volatility with energy prices, this is pretty good on the beats department for big oil. And they put together 2 beats in a row here. You can see 4.4 and 5.6. So they've already kind of pre-announced some good things going on. They are raising the dividend for fourth quarter, 8%. And the yield is one of the biggers out of the big oils. And so they got the free cash flow, even with this big deal of Hess and with buying PDC Energy, which was also a stock deal. And so they continue to buy back shares as well. But Chevron, one of the big oils, and we'll see what else they have to say on this earnings call. Then we're going to wrap it up with Exxon, ticker XOM. As I just mentioned, they are partnered with Hess and Guyana, but Guyana is a big driver for them. What is their earnings estimate looks like? They are coming off a miss, which is pretty unusual for them. 3% miss. Their last miss was back here in 2022, an 8% miss. But otherwise, fairly good, especially here during the pandemic. A miss initially when the pandemic hit, not surprising as crude prices plunged there. Very difficult for the analysts to get it right on earnings. A huge rally the last couple of years, and now it's moving sideways, similar to Chevron. But can we get a breakout here on all of these M&A deals? Exxon's big M&A was buying Pioneer Natural Resources, PXD is the ticker. I own that one, so I'm soon to probably own ExxonMobil if this deal goes through in 2024. It's expected to. I would assume that the Hess deal is not until 2024 as well. So you're free to own whatever you're already owning before all these deals go through. But Exxon, 3 months, these shares are actually up 5.5%. S&P 500 is down 6.6% in that 3-month time period. So the street's a little more bullish maybe on Exxon here than they are on Chevron, but both of these stocks will move with the price of crude, but also what's happening at the refineries, because they do refine and then sell at the gas stations. So all of these things come into play. ExxonMobil also has a big chemical division. It's one of the largest chemical companies in the United States as well. So that's another thing to keep an eye on as we head into this earnings season. So as you can see, there's just a lot going on during this week. It's hard to pick out stocks. So be sure to follow me on Twitter, or now X as it's called, at Tracy Reineck, because I'm going to be tweeting out a lot more charts over there that I can't get to in these videos. Some of them are good, some of them not so good, but you're going to want to tune in to see, what expectations are looking like, and can some of these companies keep their earning streaks alive. But this is a big week. We got the home builders, we have Magnificent Seven, a lot of them reporting. We're going to have just a lot of the S&P 500 reporting. And now we're having retail, these big prominent retail names like Deckers and Tractor Supply. And we're having the start of oil with the big oils reporting. So be sure to tune in. That's all I can say. I'm bringing you the charts every week here on Zacks.com. You can get them at Zacks.com/YouTube on our YouTube channel. And again, be sure to follow me on Twitter, just at my name at Tracy Reineck. And I'll see you all again on the next Earnings All Stars chart.